When you don't know the important pieces of data that are coming out for the week or what's happening in terms of like news or economic events, it can make it really difficult in order to find the right opportunities to get into the markets or even learn how to identify the opportunities on when you should stay away from the markets and not get into it. Because for an example, when there's something like inflation data or when there's something like the Federal Reserve's interest rate decision coming up, it's very likely that the markets might consolidate leading into this, which means just sideways, choppy price action, right? Like gold's not going to fly to the upside. It's not going to melt to the downside because the markets most likely are waiting for that piece of data or that interest rate to come out. So if you understand this is coming out, this can actually help you avoid getting stuck in some crazy consolidation or sideways price action because traders make money when the markets go up or when they go down. We don't make money when the markets are only moving sideways. Well, luckily you found this video, and after watching this, you're not going to look at the markets the same. You're going to learn how to take this information and apply it to your trading style in order to take advantage of better opportunities. My name is Josh Paveo. I'm a professional trader who specializes in fundamental analysis alongside technical and market sentiment. And the reason I'm making this video is because there's just too much misinformation out there on what it really takes to become a profitable trader. Most things out there are just telling you, stare at technicals, look at trend lines, and just slap an indicator on, and you'll magically become professional. But the problem is that's just a small piece of a much bigger puzzle in order to stay consistently profitable. So let's say that you're trading New York session, you're looking at gold, and this is gold right here. There's something called inflation data that's about to come out, and it's very important for the markets. So now if we take a second and we watch what gold does, look at that break right there, right? Gold just broke this support. If you're only trading technicals and you're just looking at what happened to gold and you're like, man, I'm going to take these sells. Like something just happened. I don't know what. Gold is melting. But if you don't understand, which you can see the little news terminal here, inflation data was just released. This is what we were watching on the live call while I was trading. Gold ends up hitting this support area right here, which is where most technical traders are going to enter sells, right? We break the support. Second thing that happens is you see a lot of technical traders use something called a sell limit, which basically means you can put a limit order here, and if it hits this area, it will automatically enter sells because technically, if you're only looking at technicals, this is a break of structure. So if gold breaks this structure, which it just tapped it, that means I want to be in sells. This is a problem when something like this happens. Now, if we take a look at what gold continues to do, you're going to see that it hits this support and immediately flips, right? So every person who entered sells here or even had a sell limit or something like that entered here is immediately 200 pips of drawdown because they had no idea that inflation data was coming out and they were only trading using technical analysis. All of this volume or fake outs or whatever you want to call it ended up coming in at the exact same time that economic data was released. If we take a look here, you can see 8:30 a.m. Eastern time, inflation data was released. And if you look here, you can see 8:30 is the exact same time that this happened. It was the data that impacted the markets. This is why it's so frustrating when you see everyone on social media or YouTube or whatever telling you that you don't need to understand economic data, or they say don't trade the news, right? If you're just staring at technicals or trend lines and you're looking for breakouts left and right, but you don't know the thing that's actually making it move, or you don't understand how to anticipate something that's about to be released, this is why over 95% of traders are losing, because the majority of them are being taught this and the majority of them follow this. Now, the way to prepare yourself for a possible move in the markets, gold, US 30, whatever, is to do proper analysis on things like economic data. So what does that mean? What do I think is going to happen to gold if inflation data comes out higher? What do I think is going to happen to gold if inflation data comes out lower? Now, all you have to do is wait for your technical breakouts or your technical entries. So when you understand inflation does this, it should do that to gold. When gold goes in that direction, whatever it is that you like to look at for entries, that's when you take your entry. But it's understanding the data, how it's going to impact it, that's going to increase your probabilities in order to stay profitable in the long term. For example, if Jerome Powell, the chair of the Federal Reserve, is about to speak, you might sit there and be like, I don't really want to trade. I don't like to trade when this guy speaks. Everyone thinks he's messing with the markets. But if you understand how his words can have an impact on gold or whatever it is that you trade, instead of being afraid or worried when he's speaking, you know that's going to be a good opportunity to win a trade. Taking it back to this trade here, looking at the CPI data coming out, if you were trading this and you were using fundamental analysis, you wouldn't be taking trades randomly in this spot because you would understand that if you look at the time here, we're about to get inflation data coming out, right? So instead, you'd be waiting for the opportunity to take your trade on gold because you know that this data is about to be released. Now, when we take a look at the data that came out, it actually came out mixed. If you look at inflation data, you can see inflation came out above expected, but we also had a second piece of data here called jobless claims, which also came out above expected. That's what this little lightning bolt with the arrow to the upside means. CPI data and jobless claims data both came out at the same time. This is mixed data. Why? Because inflation data coming out higher means that the feds are not going to cut rates. Jobless claims coming out higher means that the feds need to cut rates. So both pieces of data tell us a different story on interest rates. That's why this data is mixed. And what happens to the markets when we get mixed data? Well, we typically get mixed price action. If we take a look at what gold did, we get a lot of consolidation and a lot of really choppy fake outs here. I played this whole thing out for you guys to see how mixed data also gives you mixed charts. Because if you're just sitting here and you're just trading technicals, I already showed you before how you can get faked out on a sell. And now when you see this come back up, you're like, oh, it was what a lot of traders call this a liquidity grab. Like, oh, it's a liquidity grab. It's supposed to be buys, right? They think that the markets are hunting for your stop loss order or something down here. And then you take buys. And now when you take buys at the breakout here, you can see it multiple times. You have a breakout, you take a loss. You have a breakout, you take a loss. It's like you're taking unnecessary losses, both on the sells down here and then the buys up here. And if you had just paid attention to the fundamentals and understood that this data was mixed, you probably would have left gold alone this entire time and not lost any of your money. And sometimes not taking a trade and preserving your capital is much better than actually taking a trade and taking unnecessary losses. Because guys, if you're only trading technicals and you're only taught technicals, most likely that's all the person teaching you really understood. And in order to keep selling you the idea that technicals works, is probably the reason why the majority of them go to lifestyle marketing. And you see them showing the dream or selling all of the nonsense, which none of their students seem to have, but they all want to achieve. And the only person who achieves it is the person selling you the idea that technicals only work. Take a second and go look at whoever your favorite technical analysis guru is on social media. And I'm willing to bet the majority of the stuff that they're showing you is lifestyle stuff. And it's not to say that there's something wrong with having that or achieving that. I love where I live and I love what I drive. But at the same time, to make that the selling point, to tell you that lines on a chart is all you need to become a profitable trader, to me, it's just foolish. And this isn't to trash anybody, right? There are people out there who are explaining technical analysis really well, but you have to understand it's just a small part of what a much bigger piece of this puzzle really is. You can go back and watch everything that I just talked about, breaking this down, but next week we'll be doing another video and I'll be breaking down another trade using fundamental analysis after the release of jobless claims data, which is just a measurement of the number of people who are claiming new unemployment benefits. This is really important for the Federal Reserve because this is one of the things that they pay attention to in terms of the labor market on deciding whether or not they should cut or hold interest rates, which will most likely have a big impact on things like gold, equities like US 30 and NASDAQ, which I love to trade. I hope this was helpful for you guys. Share this with anybody who you think needs to know this information. Subscribe if you want to see more content about trading. Then I'll see you guys in the next video.